So this video is sponsored by Bityard, a crypto exchange with 9 out of 10 stars by the Coin Bureau guy, 400 cryptos to choose from their spot exchange, derivatives that include commodities, forex and traditional markets, as well as inverse perpetual coin futures, USDT perpetual futures and leveraged tokens. You can even set up a copy trading account so people can copy your trades, you earn commission on those trades, or you can follow other traders who have better results than you. Set an account up with a link in the description and get mystery box bonuses for completing random tasks. Bityard. Hello everybody, welcome back to Wrecked City. So I released a video accidentally, to be honest with you, in the middle of the night. It was supposed to be released yesterday evening, to be honest with you, because I was talking about events that were going to unfold today. So I suppose if you were up in the at 2 o'clock in the morning, you would have seen it and it would have shown to be relevant. But yeah, accidentally got released in the middle of the night. Not very good at YouTube stuff, to be honest with you. Production value has never been my strong point. Right, so let's have a look at Bitcoin as we are dripping down towards that 200 simple moving average. The hallmark of Twitter right now. Oh, it's the 200 weekly. It's gonna work, man. It's gonna work. This is it. This is the bottom. And you know what? Very realistically, it could be. I can show you why. If you go to the Bitcoin chart on the weekly, we can have a look with our indicators on. If we can just get them on, come on, and we can have a look at the 200. The 200 weekly moving average. So even though we had wicks down below it here, we more or less closed above it. We came down in a bear market here and closed on it and remained above it. Previous bear market, this is where it came into existence, ended more or less on it. Yeah, there was lows obviously, but when the 200 weekly came into existence, it was relatively good at spotting the bottom. So again, we are looking at this as a potential bottom, and there's no reason why it couldn't be the bottom. I'm not saying that it is. I'm not saying that it isn't. The whole of crypto, Twitter and YouTube are saying that it is, and I would agree that there's a very strong possibility that it would be, unless of course you watched my video that I released accidentally in the middle of the night, where we allude to the fact that crypto is effectively like an indicator leading through the weekend for traditional markets. And I was making the case yesterday on the video that was, like I say, released in the early hours of the morning, that the Nasdaq is comprised of obviously 100 tech stocks, but in that are a few absolute mammoths that more or less dwarf all the others by comparison. Amazon, we've got Amazon, Apple and Microsoft. We're looking at those charts individually to think about, all right, how are they going to go? So rather than bringing those charts up, I just suggest you watch that video. But effectively, long story short, they do suggest that they want to come down themselves, and if they come down, it brings the Nasdaq down. Now the Nasdaq is obviously coming down. We've got our 200 weekly moving average here. Come on, 200 weekly, save us. But that's only a measly, and again the pre-market's already opened 3% down at the moment. That's a 9% drop to the 200 weekly. It's also this horizontal support. Okay, fair enough. We could manage that. We could handle that. But I don't think that's what's going to happen, because we looked at Amazon and all those others that I spoke about, and we worked out that give or take, if you merge them all together, it roughly adds up to about a 20% drop. And if that was a 20% drop from here, that would take us down to exactly down to the pre-pandemic highs around this support. We've had this in there for a while just because it's the pre-pandemic high, and that's where I'd be looking to start to get into some stocks. I've been in a 90% cash position for stocks since Omicron came out. I was like, that's it. I'm not having one of these again. I'm not having one of these situations again. Let's get out of these bloody stocks, and I'll sit on the sidelines and wait. Now, unlike crypto, I've not been buying incrementally on the way down. I've stayed there. I've stayed in cash for stocks. Now, if we think about what this means for Nasdaq, which is from the top to the bottom, give or take 43, maybe we could be looking at a bit more down to the pre-pandemic lows. That's about 60. So let's just say we could be looking at a capitulation from the top to the bottom of about 50%. All right, so that's in the middle of the pandemic crashing area. Maybe we float around these tops, so we don't actually hit those bottoms, but we float around these particular areas, these tops, maybe about 7,700 for the Nasdaq. So that's a big move, right? We all know the correlation between Nasdaq and Bitcoin, which is why one of the reasons I made that video yesterday, saying I think that equities are going to wake up in the morning with a sore head just through association with what's taken place with crypto over the weekend, almost like using crypto as an indicator to trade traditional markets and see which direction they're likely to go. So it was always, in my opinion, going to be like a vicious circle today when we woke up, that things are going to keep coming down because Bitcoin, crypto, So indicator for further downside coming into Monday, and then Monday further downside for Nasdaq, and then continuing with that crypto downside, because crypto and Nasdaq are heavily correlated. So it's like a vicious circle. So we are thinking about a massive capitulation for Nasdaq, right? When the word is out of the 75 basis points rate hike due potentially this week, right? The FOMC meeting taking place on Wednesday. So markets are again pricing that in. All markets, crypto, the lot, all pricing that in, and that's a bit more aggressive than they've done previously. They've been pretty lame at these rate hikes, to be honest with you. They should have gone harder and heavier. The markets were pricing those in. We had a 50 basis point expectation. We got a 25 to start with, giving us a nice big bounce. But then realistically, what was the point of that? It didn't touch the sides. There was geopolitical events. There was lockdowns in China as well. Never mind all the money printing that needed to be recalled, for want of a better word, from the balance sheet. So it's a bit they basically wrecked the economy. They've gone too soft for a silly amount of time, and effectively we'd be looking for the case that we're just over halfway through the full capacity of this downtrend, bringing us to roughly between 50 and 60% to the capitulation low for Nasdaq. Now, if that's the case, we can transfer that information over to Bitcoin and go, yeah, we love the 20 weekly, and historically it's worked out very well. Two bear markets accumulated at the 20 weekly. That's where the absolute low was put in. But there was a problem this time round, is that obviously as we've been sucked into traditional markets, this is just a simple line on a screen. It doesn't have, in my opinion, the relevance that it had in the past, given the way that the markets have moved together and why they've moved together, what they represent as they do it. Like I say, seeing the performance of crypto over the weekend and translating that into equities this morning, like I was saying on that video, it is a vicious circle. So if we're going to get a bigger dump on traditional markets, these wicks, these moving averages, they are nothing more than hopium, and they probably won't hold. But that doesn't mean we can't buy those dips. And like I say, I've got a buy order in at 23,350. So just been front run ever so slightly. I'm pretty confident that it will get hit, because I think I know where equities are going, because I think I know where those stocks are going. I also think that the Fed has really messed up here, and they've got no choice to either choose the consumer or the lender, and I doubt they're going to choose the lender this time. I think they're going to have to go for the consumer, because historically it's the consumer that's always managed to drive markets out of their horrendous downtrends. And if inflation is high, the consumer can't consume. Without consumption, you don't get your economy effectively flattens out. And I think we're looking at that anyway. We're looking at a bit of a boring market across the board for a while, but that doesn't mean that we can't try and catch these significant lows. So obviously here is one for Bitcoin. The next, you could make the case that 20,000 is one. We have this top, and then we have our parabolic shoot up. But really, just like Ethereum, it's a bit of a non-event, and this is what I was saying yesterday. I think the top on Ethereum is a bit of a non-event. Yeah, we had a little stop there, and we carried straight on to our 20 weekly. So without trying to blow your mind with too much information, if traditional markets open up, which they're going to open up any minute really, and they open up okay, and they don't continue to go down, I think that Bitcoin and crypto finds a little bottom around here, maybe for a decent bounce tomorrow. And this would coincide with obviously Ethereum hitting its 20 weekly, again the magical moving average, and you merge that with the dominance chart, where we've been looking at a rejection around these levels for what could be alts to run in comparison to Bitcoin. So I think it all depends on American markets. Obviously the pre-markets opened up down. It could easily get a lot worse. This could be the day where we capitulate. It might just be a reaction to the grapevine talking about the 0.75 basis point, right? So there's a lot to think about, and we can't get particularly super bearish from this level. Obviously we are approaching, if not already hits, a significant low, but we should also think about the bigger picture, which is that, crypto is great, Bitcoin's good, its projected outcome is amazing, risk to reward is still very good, especially from these levels over a decent period of time. I would make the case that anyone that's looking to accumulate Bitcoin should start doing it now, regardless of threatening a 50% drop, which is honestly what could happen to Bitcoin. 50% drop from here would not surprise me at all. But in times of those 50% drops, they do turn around quite quickly. We had a 50% drop around here, didn't we? This is not the right chart. This is Ethereum. They're more or less all the same. So this is your still Ethereum. Come on, mate. This is your Bitcoin, and here we go. There's your 6,600 more or less support. We could consider that to be the 30,000 version of where we've been recently, and then you have your 50% drop down. Accumulate at a lower level. Arguably, this was the 200 simple moving average where it did accumulate. We can forget about that for now, and then from the drop to the moment that it actually reclaimed, it was a 6-month period, and then you're back in profit again. All of this that have been bought down here, including my entries, it didn't take long for those lows to be dug out from the grave, but while you're down there, obviously it doesn't feel great. But this is an up-only chart, same as the Nasdaq. Everyone will recognize that. I recognize that. They're very forgiving if you're buying into the major indexes like that from these capitulation lows. Try not to be too afraid. These things will turn around. It will turn around again. We're likely to go down to this easily. We could go down to the 20 grand easily. 16 probably would be where I would imagine if we did break down below the 20 weekly. 16, between 16 and 12, the absolute lowest of the lows. And if we did get down there, it probably wouldn't take very long at all for it to springboard back out of there. So dollar cost averaging, if you have the capacity to do that from this level and lower, is in my opinion a pretty decent idea. And if you've been selling, if you sold and you've got a load of profit from obviously this bull run that's been pretty amazing, and you're looking to buy back like me, obviously I've been buying back since 40,000, sold around 52 or 54 thereabouts before the Omicron situation got out of hand, and I've been buying back 40,000, 35,000, 31,000, 27,000, and hopefully 23,000, and I will continue to do that, because you know what, it's going to turn around. It's going to turn around. But unlike, I suppose this period, which is what's I suppose been the infamous crypto period where everybody just thinks that this is how it goes. It's not really how it goes. For the most part, it is pretty choppy and volatile and testing of your emotions. But the lower we go, the better it is. And this is really what you need to focus on. The best amount of money is made on the back of a red candle, right? It is. And every time we see a red candle, I know it's annoying if you're holding on to a lot of crypto or whatever, but if you're not, or if you've got money to put in, the red candles are your best friends. They really are. They are your best friends. But we should expect lower, even lower than the 20 weekly. Because the bigger picture it shows a real beast lurking around the corner, and that's fine. That's fine. So just before we wrap it up, just put it into context. This was your housing market bubble. This is your .com bubble, which is just we're not in a scenario similar to that. We're looking at something similar to this, which again is around about a 50% from its top to its low, and the low was put in, so it's 56% retrace, similar to what we're looking at for here. So it's kind of what we're scheduling around here, 56 from the top to the bottom. And then look, in the very moments that the banks go bankrupt and the world enters the recession, marks the absolute low. It's called the ultimate capitulation. And then from there, obviously this is Nasdaq, it's diminishing returns, but from there that is the ultimate. It's a decent return over a very long period of time, obviously, but it is a decent return, and that's similar to what we're looking at now. We are waiting for that kind of vibe to take place in Nasdaq, which will transfer over to crypto. So feel free to buy the dips. Feel free to buy the 20 weekly, the 200 weekly, sorry, but don't be surprised if it breaks down a lot more than that. And again, if it does do that, try to buy that fear, because it's that fear that will be your friend in the end. Similar to the way it felt when I bought the 4,000. It was pretty hard to do, but you put your trust in the method, it was hard to buy a chart that looks like this. This is what the chart looks like. That's what the chart looked like when I bought into it. It's hard work pressing that trigger, and everybody around you is telling you it's going to go to 1,000 or lower. It's hard to do it, but it had to be done, it was done, and that's the sort of environment that we're looking at now. And like I say, if you want to take part in the real crypto dream, you do have to wait and take opportunities when they come. And that is one opportunity which is lurking around the corner that could drive this price much further than anyone thinks it will do. But think about what you could achieve from picking it up. Even altcoins as well. And I'm not talking about the shittest of coins, although they could probably make you millionaires. They are certainly gambles. I'm talking mostly about Bitcoin, Ethereum, and some of the higher class cryptos that have got things brewing. My favourites effectively would be things like Algorand, Matic, even ICP, I suppose. Chainlink, the list goes on, but it's all about Bitcoin. Bitcoin is the main driver of the crypto market, and obviously the outside of that driver is the Nasdaq, and outside of that is inflation. And so it's unfortunate if you're holding on for to loads of crypto right now, but if you do have available cash, this is the moment. We are entering into epic territory now, and you should be grateful. Right, thank you for watching. I hope you have a nice day. Try to at least. And take it easy.